Your account, your money needs your trading strategy. It's time to build your own system. Hi, welcome to Mini Traders. If you want to make a trading system which is completely mechanical and objective and you want to test it before you use it, this video is for you. There's something special about this video and next videos in this playlist. These videos are useful as a single video and will raise your knowledge in trading environment. And they're also a part of a complete course which gives you the complete idea and the skill to make a trading strategy. Here is the question. What should we do to make a trading strategy? This video is about answering this important question. But before we start, please subscribe in this channel and hit the notification bell under this video for getting notified when I upload new videos. First, let's see why we need a system. We want to trade in some financial market. Imagine that we have designed a trading system and we have carefully tested. This would give us confidence and also we know what to do in critical situation, and this will all give us profit. No one can get long-term profit out of any financial market without having a proper system. Anyone who designs a system should consider risks he can take. After that, he can trade without any mental pressures. Systems also should be optimized for the trader. Someone can take more risks than the other, so the same system which it was profitable for someone can be a failed project for the other. Now, let's see how we can create a system. First thing I have to mention before we start is that every decision has an opportunity cost. For example, if you use smaller stop losses to prevent large amount of loss in each trade, you may fall into the trap of long shadows in candles, and if you use larger stop losses, you have to face with greater amounts of loss in each losing trade. By now some of you may have realized that this video has some complexities that you may not understand. This is because this video and next videos in this playlist are not designed for beginners. But don't worry, you can start watching Forex Basics playlist and also classical technical analysis course instead to get ready to watch this course. Now we are ready to solve the problems of making a complete system one by one. First of all, we should choose markets which we can trade on them. There's a minimum requirement as a technical analyst for choosing a tradable market. Here are important ones. Liquidity is one of the most important factors you should consider. Liquidity is a measure of how easy it is to turn an asset into usable cash. When you decide to sell one of the assets you have, you want to sell it immediately and without too much difference in price. This is high liquidity. You can search the internet for some factors helping you find high liquidity markets. Forex market has a good amount of liquidity and you can see lots of futures, securities, cryptocurrencies and other assets with this feature. Avoid new markets. Sometimes new markets may give you some profit, but it's dangerous in most of the times, even if they have a minimum liquidity to trade. Most of the times you don't know even what you're trading, and the prices are very different in a few months later. So avoid these markets. Older tradable markets are more than you need new ones as a retail trader. Monitor liquidity. Some of assets may lose their liquidity in time for many reasons. We should watch carefully our assets to avoid low liquidity markets. next problem is to find out the trend. We can look at trends by its time scale. So we can categorize trends into three main time scales: short term, mid term, and long term. You can watch for these trends by switching your time frame. We can also have another type of category by direction of trend. We can have three type of trends in this way: trending up and trending down, or sideways. There's a point here. We consider sideways as a trend. We don't see the market as always going up or down. Sometimes market stops somewhere and we can't say which way it will go after this period, and we have to respect this trend. Strategies which make profit in trending markets are called trend following, and the strategies which make profit during sideways are called counter trend. They have differences in the way they look at the market. For example, trend following strategies only trade in the direction of the trend. They only buy in uptrend and only sell in downtrends. This is while a counter trend strategy tries to buy at the bottom and sell at the top, and many people are using both strategies and make money out of them. I think it's obvious how important is identifying the trend. So what should we do for finding them? We have some great tools available for everyone, and they are completely mechanical and you can test them in past time. For example, we can use two moving averages with periods of 3 and 12 days to identify uptrend and downtrend. Or if we want to identify sideways, we can use 3 moving averages with periods of 4, 9 and 18. And we can also use two simple trend indicators, and when they do not agree, we can say it's sideways. These three were only simple examples. We will talk about this subject and we will know some other efficient tools for doing this in next videos. So if you haven't subscribed yet, you can simply do it right now. There are many traders who are searching for a magical indicator for showing them trends, finding best time to enter, best stop loss, best exit, and so on. It could be pleasurable if trading in financial markets were this easy, but we can manage the market in a problem-solution approach. We can define our problems and then find the solution for each problem, combine them together, and then we have a system. If we are going to trade in a daily chart, we should find long-term trend for months and weeks, then find mid-term trend for last days, and finally find short-term trends, which is for 2 last days and can be a trigger for more accurate entry. For solving entry problem, we should find some efficient mid-term indicators. We have lots of them and we will see them and learn how to work with them in next videos. Note that we need a mid-term indicator which gives us several entry choices, because most of the time the first signal which our mid-term indicator sends is when our long-term indicator is not allowing us to enter. After we have confirmation from both mid-term and long-term indicators, we still have some options to enter the market. Here are some of them. Most of the experts in technical analysis field believe that exit time is more important than the entry, and they think exit time is leading to profit. So stay with us in next video and we will see how we can set stop loss, how we can exit from the market, and how we can set our re-entry rules. If you enjoyed this video, like it, and for more videos click on subscribe button. Thanks for watching, have a good time and bye.